So let's break this down, okay? So number one is that once you have a point that you think price is going to go to, like this low, for example, and then price is right here. So what the first thing is, I'll save that for market structure. I don't want to confuse you guys. Okay, so we have price moving in a direction, right? So it's going down, and then we have a point that price is going to go to, like right here. You see price come back up, but you still think it's going to come down, right? So you want to get in while it's going down because you want to sell, right? If you think it's going down, then you sell, and as it goes down, you're making money. Vice versa, if you think it's going up, then you buy, and then you make money as it goes up. So all you're doing is you're waiting for price to get to a certain point where you think it's going to react off of to go down to the level in which you first thought it was going to. Simple as that, okay? Now, how to actually get in at precise points, that is what will take time. But you don't have to know that in the beginning, which is called sniper entries, right? So the basics is you find a zone like this, right? You find a level like this, okay? So if you go back, there's going to be a lot of points where all you're doing is looking for a specific point for price to react off of, okay? But in the beginning, you're still learning how to identify the points in which price will react off of precisely, right? So in the beginning, you might just be like, let me mark this whole zone, right? And then you're like, okay, no, let me mark this one. Then you get more better. Then you're like, let me mark this, right? And then you can even get to the point where you're like, let me mark this right here. And then you can go down to smaller time frames and refine it. But in the beginning, find just the most precise area, right, that you think price is going to go off of at a specific time. And all you're doing is, okay, usually what I would teach is that, you wait for price to tap in, and then if you see like an imbalance inside of the zone, then you can mark that gets a little bit more specific, right? And then you can place your entry. So your entry would be, just to get even more sniper entries, right, you can cut the refine zone in half, and then boom, your entry is right there. And then your stop loss could be the next high, because if price breaks above the zone that you're trading off of, like say it goes like this, then price isn't going to use this to go down to your objective, so then the trade is invalid. That's why we place our stop loss above or below zones like that. So let me delete that. Okay, boom. So this is like super precise, right? Sniper entry. And then you enter before you even see price reject. You enter as soon as it taps in. And I still enter like that. I still use that, right? But now what I'm doing is this is kind of like the perspective that I have now, is I can still do that and I still know how to. But what you want to do is obviously you have to have the zone that you're targeting, right? And then as soon as price goes up into, you identify the zone that you think price is going to react off of, right? So, okay, if price comes up into here, then I'm going to sell off of this to take this low. So price comes all the way up, and then what you want to see is this right here, okay? So as soon as price taps into the zone, how are you going to know price is going to move off of the zone in the beginning? because I know how to now, but in the beginning you don't really know. How are you going to know it's going to react off of the zone until you wait for a reaction? The best way to know if price is going to react off of a supply demand zone or order block is by waiting to see if it reacts. This is called a break of the candle entry. So what you're doing is you're waiting for the market to show you, boom, okay, there's resistance here. Price just broke the low of this candle, which means this candle that tapped into it, the low where it started has now been broken by the second candle. So what you're doing is you're waiting for that, and then your entry is right there, and then you can set your stop loss above the zone like that, and then the market actually goes in, taps into it again, but you can still see a second rejection, and then that is where your entry is, and obviously your take profit or where you want to get out of the trade is at the next low. And then boom, then price goes to your take profit, and then you make money, praise God. So that is the refined entries, refined version, sniper entries, right? Now, let me go a little bit deeper into more complex type of entry models or whatever, you know what I'm saying? So I recommend just using the first way when you're starting. This is more like, how can I say it, more detailed, you know what I'm saying? So let's say you have an identified zone, right? And you have identified it on the 5 minute. What you can do is you can go down to the 3 minute. Okay, so now we have this zone, right? And then you can go down to the 1 minute. I don't use 2 minute. Okay, so now we're on the 1 minute chart. And so now we have this, and then you can even mark small imbalances like this right here. And then let's see what the market does. And then you can see how, okay, then price comes down. Price actually taps into this on the 1 minute, this zone. Right here, you can see how it taps into this, then comes up to take this high. And then the market overall, let's go back to the 5 minute. If I mark this right here, this is the beginning of the actual block or order block right here. We go to the 1 minute, right at the exact beginning, which is here. This was the first reaction zone inside of this fair value gap or imbalance, and then price comes up and then taps into this right here. And so that is super precise, you know what I'm saying? Can get your entry, and then if you have an entry zone like this, you can cut this in half, right? Or just like in general, like let's go to the 5 minute, and then let me clear this. Okay, boom. So if I mark this zone, let me just do this all over again, then you can refine this. Then if you cut that in half, boom. Okay, and then let's go down to the 1 minute. Okay, so now we have the halfway point, or I'm not gonna go into that, all of that, but then your stop loss can be here, and then, which is just these highs right here. Oops. Boom. And then price reacts, okay? And then, you know, you can be catching all of these sniper entries as you see price reacting and breaking structure, which just means that this low right here, price just broke this low and then continued down. So after you see breaks the structure, then boom, you could get more entries to go down to take this little price run right here, or liquidity run. Cut that in half, right? Okay, boom, I cut this in half, and then I'm entering at the halfway point, and then your stops can be, okay, boom, right here or above this zone, take profit here. And then, you know, that is like way more deep, right, than just creating this zone. But you can see that even with doing all that extra stuff, right? If you would have just marked the zone on the 5 minute, entered right here, or enter after the break of candle, stop loss here, take profit the next low, you're catching literally the same move. Those are just for like people who want to get super detailed, which me, I don't even do that at this point. I'm like, bro, just give me confirmation off a zone on a 5 minute, make my life easy. I'm entering like that. But if you want to go sniper entry, then go that route. You know what I'm saying? I recommend sticking to one time frame, the 5 minute, and mastering this entry model. Once you master it, then you can start learning other stuff. But if you haven't even mastered the simple basics, then why are you trying to learn the more complex things to make everything harder? Like, just create a list of things to look for that are very simple, wait for those things to show up, and then just get good at doing that. Once you get good at doing that, then you can start becoming more detailed, more advanced, and all that extra stuff. So that is the first setup, okay? Now let's go to the next day, okay? The next day we can see this is an amazing example. I'm so glad that price did this, right? So we have all of these highs in the previous session, right? And so we can see all of these general highs right here, right? This is the second thing that I use. So in the first, my bread and butter setup, right? So this right here is literally, this is my favorite setup, liquidity runs. This is my bread and butter setup. Supply and demand. Super, super, super simple. Super, super, super effective. Bread and butter setup. Identify a point of liquidity. Identify area where you think price is going to react off of. Wait for confirmation. Wait for it to reject. Enter. Boom. Very simple. Okay. Now, this is called a turtle soup. So when price creates highs like this, or points of liquidity, when the market goes up to take these highs or lows, then usually after all of them have been purged, is what is called. After liquidity has been purged, price will go in the opposing direction. And so usually what you can do is you can just catch the move after things like this have been taken. Like, let me show you an example on NAS that I called out live the other day. Okay, right here. So we can see this huge news event, right? Which created this huge imbalance or this huge gap in the market, right? And then you can see that price came up kind of to fill it, right? But then we can see all of these equal highs, right? Which is what I call liquidity also. So we have all of this money resting above here now. And so essentially, right, but I also had these lows marked as well. And I called this out in the Discord. I sent this trade out literally. So this is a perfect example, okay? So I have a point and I said, guys, like, price is gonna come up here, but I was trying to catch the move, and here it wasn't working because it was just after the session. Like I've said, like, you have to wait for the right time. So I just knew price is gonna come up to take these highs and fill in this imbalance right here. Like, there's no way price is gonna drop 150 pips and then leave this and then have 3 equal highs, which is also, these highs are also on the 1 hour time frame. So on the higher time frame as well. There's no way, like, there just ain't no way price is gonna just not come up to take these and fill this in. So I called it out. I sent it to the chat, everything. I said, all right, guys, price is gonna either react off of this right now, or it's gonna wait for the next New York session and it's gonna react off of a zone like this. Or I also have these lows because it might just take these and then go. So I have multiple scenarios that I'm watching out for, okay? So then price, let me go to the 15-minute. Price literally, right, I had this zone marked, boom, right here. So price literally was consolidating, and then the next session came, right? The next New York session started to play out, and then I had this 15-minute zone marked. This one was invalid, obviously, so I deleted that. And then when price, this is a perfect example of a liquidity run setup. So I mean a turtle soup setup and a liquidity run, but this is a whole nother setup called RMR. All of these concepts, they use the same principles, right, of liquidity, time, and supply and demand order block zones, okay, or fair value gaps or imbalances, right? All of those are used, but you can use them in different ways, okay? So for example, this is a good example. We have 3 equal highs. Boom, we have 3 points of liquidity, and then you can even mark these liquidity zones right here as well, okay? So price gonna take these highs, and I was confident about it, okay? And it's gonna fill this in because it dropped 150 points. It actually dropped like 300, but this still hasn't been filled. So after price, boom, takes these lows, literally it wipes these out, okay? And then you can refine this to get super specific, but this is the overall zone right here, right? And then if you want to, you could mark this little fair value gap or a balance inside of the zone, okay? So which is right here, this wick to this wick. This little thing is called a fair value gap or imbalance. Boom, you mark this out, price taps into it. So a turtle soup setup is great if there's liquidity in the other direction. So what do I mean by that? With these lows, right? These lows just got taken with this wick. Price comes down and then finesses all of these stop losses or all of these lows. When it does that, it taps into this zone, and I'm like, okay, all of the money was just taken here. So now the only money resting is above here, right? So after price takes a whole bunch of lows, okay, I'm still recording, praise God. After price takes a whole bunch of these lows, boom, I'm looking for an area in which price is going to react off of to go take the lows or highs in the opposite direction or liquidity in the opposite direction, just like this. So price comes down, boom, finesses all of these lows, taps into this zone, and then you catch the move going in the opposite direction. So let's just say you entered at, make this super easy, right? Okay, boom. Let's just say you enter right here. Let me actually clean my chart. Let me take this off so you can see. Let me actually change the color as well. Gold, boom. So you have all of these highs right here. You have this imbalance that price is gonna fill. So let me, boom. So this is the overall target, but you also see these lows here on the 5-minute time frame, right? And then you see price, boom, react, take these lows, and then you mark a zone like this, and then let's just say you enter, where'd it go? Right here. Let's just say you enter right as soon as price taps in, or you can even wait for a confirmation. So boom, after that wick, then you enter as you see price going up, but you have to be kind of quick sometimes. So boom, price taps in, you enter, your take profit is the next high, which is right here, the next major high, or obviously these points of liquidity, right? And then, okay, that's the setup. That's all you need to know about that setup, okay? Literally. But I'm gonna go even more deep for the people who want to understand the more complex stuff that I use. Let me go. But that's all you need to know. If you're starting off, then don't try to implement what I'm about to show you in this next section, okay? if you have a huge imbalance, right, there's something I call a double imbalance, which is I see this, right? So this is the overall zone. And then we have this liquidity, right? But if I look in previous price action, I see this imbalance as well here. That aligns with this one. So I'm marking this out, and then you can even get a horizontal ray, and you can cut this in half as well. And then that's a double IMB, right? And then that could be another take profit. And then you can see price react exactly at that level symmetrically. And then you can keep doing that with these right here. You can cut this in half. Okay, and then boom, price taps in there and then goes up to take this high. So don't let that overwhelm you if you're a beginner. That's just for a little bit more advanced stuff. I want to make sure that I'm teaching out all different perspectives, right? So that is my other setup called a turtle soup. Okay, so let me go into some more bread and butter setups that I can show you guys. So this is another example right here, right? And I usually don't like using a lot of price action to base my trades off of in the previous days, like way long ago. I like to just look within my session. For example, like, oh, there's equal highs over here. Like, no, I'm not paying. I'm focusing on my session. I'm trying to get in and out. Okay. But you can see that this is another example. After price takes this high, then it reverses to go down to take these lows. That's a turtle soup setup. Boom, takes these highs, goes down to take these lows. But let's that's why we're on the 15-minute. Okay. Boom. Let me find. Okay, here's another example of my third setup. I'm going super deep for you guys. Okay, I want to make sure that I give you all the tools needed for you guys to start implementing this and succeeding with this. So usually if there's a large imbalance like this, I've already covered this day. Let me go back to a different example. I see examples in all of these, but I want to find one that I can demonstrate clearly to you guys. That won't be super confusing. Okay, so in this price action right here, right? When price is moving, first of all, you have to understand price doesn't just move in one direction and then keep going forever. When price goes up, it will always have a retracement, and there will always be a point in that retracement where it stops to keep extending, which is called a retracement, right? So boom, we have a leg. That's what it's called. A leg, retracement. A leg, retracement, leg, and then retracement. So whenever price retraces like this, those are the zones that you can use in liquidity run setups to enter before the other leg or before the other continuation. So when price taps into this right here, this is like the whole general zone, right? And then we have this high. This would be a setup right here that you could have used. Boom. And then your stops below the low. Your profit here. Your second profit could be here. And then the reason is because we have these equal highs. And then we have this high. So we have a lot of points that price would be drawn to, right? And then we have obviously structures moving in that direction. How do you know? Because highs are being taken, and then the lows that price is making are higher than the previous ones. So we have a high here, We have a high here. We have a low here, which is above this low. Price taps into the zone. So price taps into this overall zone right here. And then as soon as it taps in, that's a point for you to get in before it goes up again to take these highs. So you enter, stops below this low, and then bread and butter setup, liquidity run setup. That's another example. And what I will do is I will actually mark this and I'll put it in the journal for you guys as well. So we can, let me make my little drawing again. Okay, boom, boom. And then we have all of that. Okay. And then we have this low, we have this low, we have this low, then we have this high. So we have a higher low, which just means this low is higher than this one. And then we have all of these highs right here. That price is going to, this is the overall direction, right? And then we're getting in at this retracement. So boom, let me record this. And then profit would be this next previous high. And you can mark them out like that. Boom. And then let me take a screenshot, copy link. And then let me place it in the journal. New setup. New setup. Okay, boom. So that's another example. Now I'm going to show you one more and then I'm going to end this module because I don't want this to be like crazy long to where it just gets too much to watch. But I'm going to film another one after this. So we have, I can mark this zone and I can show you this zone, but it's not really a clear setup and your setups won't be clear every time. You know what I'm saying? So you kind of have to just flow with the market. They're not going to be super clean, perfect, but just for teaching purposes, I want to find setups that look extremely good so it's simple for you to learn. So you can see, I see setups in all of these, but I want to find ones that look really good for you guys. Okay, this is a decent example right here. We have this overall swing high, and then we have points of liquidity that market has created in the previous London session, which is in the night. Okay, so as soon as you've identified zones like that, the market will most likely go in that direction to take those highs. And so we can see at 7:30, and then this wick is at 8:30, we can see 7:30, price taps into the zone, takes these highs. That would have been the best setup, right? Because this was probably 8:30 news. That's why that wick looks like that. And then stop loss below here. And what you can do is you can enter a trade and you can take your full profit here. That's fine. Or you can take some of the profit away, like you can take some profit and then you can leave a runner is what it's called. So let's just say I enter with like 5 lots right here or something, right? Or let's just say 1 lot or 1 contract, right? Okay, boom, price comes up into here. Then you can take half of that position off. So then you take some profit and then you leave the trade to run to your second take profit, which would be this overall swing high. I don't really do that a lot. Sometimes I do, okay? But I like to just get the clean, super simple setup. Boom, I enter, boom, take profit, I'm done, okay? If you want to leave runners, then you can too, and I do sometimes. But this is the first bread and butter setup right here. And then I'll take a screenshot of this as well. We have highs. We have equal highs. We have a point of liquidity. Price comes down, taps into this. And then boom, price goes up to take those highs. Very simple demand zone right here. price taps off of it, boom, takes the liquidity. That's the first bread and butter setup. And let me go back so you can just see it like that. Okay, boom. First bread and butter setup. Very, very, very clear. Copy link. Let me put this in the journal for you guys as well. Boom. And then you can even see price comes all the way down. This wouldn't be the best setup just because this liquidity was taken, but it still hasn't taken this swing high. And so, you know, you can see price taps into it, and then you see a break of candle, which just means price rejected off of it, and then right at this candle, the start of this candle, price just broke above it. And so this is a more risky setup, so you would wait for more confirmation, and so you could enter there, stop loss there, take profit could be the next swing high. And then you can see price goes up and then takes all of the liquidity, all the highs, extremely smoothly. Your entry would have been right there, take profit there. And then you can also see the same exact example off of this zone as well. And so you can see it just playing out over and over again. You just have to train your eyes with practice and watching it play out live to be able to identify zones like this before they happen in real time. And so boom, taps in, boom, taps in, boom, taps in here as well. All of these are amazing examples. And then we have obviously liquidity here, and then the swing high or the overall high at this point right here. So that's it for this module, guys. I hope that this helped you. I hope that just showing you some more examples, breaking some stuff down, going a little bit more deep into some concepts for the more advanced people, but just showing you my bread and butter setups over and over again hopefully helped you. And I bless all of you guys. I love all of you guys. And go check out the journal, because I'm going to leave those setups up there for you guys. And so I will see you guys in the next module. God bless you all.